a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Countdown to the jobs report finally. Futures rising, the dollar slipping just a little ahead of the delayed January payrolls data. No quiet corners. AI disruption fears hit European wealth managers following a sell-off in US peers. And Israeli Prime Minister Benjamin Netanyahu is set to meet President Trump at the White House to discuss Iran. So let's take a look at those futures. Well, NASDAQ 100 futures have flipped negative now, but we're looking at very small gains and declines this far out. Don't forget, yesterday we saw a drop of about 1/3% for the S&P 500, about 0.6% for the NASDAQ 100. So it's been a bit of a down week. Everything but tech is holding up this market. Small caps, utilities, real estate. Just pick your sector as long as it has nothing to do with tech. Let's take a look at the bond universe before, I guess, a widely anticipated jobs report. I mean, it's been delayed, but what will the data really tell us? The 2-year yield at 3.44, the 10-year yield well below 4.20 again at 4.13, and that 30-year yield at 4.77. So we'll be keeping an eye on all of that data for the next few hours. But first, let's get to some individual market movers now. And for that, we'll go to London and Abir Abu Omar. Abir.
Good morning, Bonnie. Let's turn towards a story that ties in with crypto or Bitcoin. I've been talking a lot about Bitcoin this morning. Robinhood, with results yesterday, it's down over 7% in the pre-market trade this morning. That is primarily because of their crypto business. It was down nearly 40% over the fourth quarter. And remember, Bonnie, Bitcoin, the weakness in Bitcoin has continued into this year. So the push that Robinhood has had into prediction markets makes sense. Turning into another stock that is a blast from the past. Well, I mean, it's not having a blast this morning. Mattel is down over 30% this morning. And this ties into the retail story that we saw coming out of the U.S. yesterday. The retail data over the last month of the year was pretty flat. That is what we saw, and that is reflected in Mattel's stock that did not really have good sales over the past quarter or the last quarter of the year. But on the upside of the market, the last stock that I'm looking at this morning is Cloudflare. The software provider is having a pretty good morning after results yesterday. Now, in contrast to what Cloudflare is doing this morning, we saw AI-related stocks in Europe not do very well on disruptions this morning. But this is the flip side in the U.S., where Cloudflare is doing good on earnings from yesterday, Vani.
Well, Abir, we will keep an eye on those stocks today. Thank you so much. That's Abir Abu Omar, and she's going to be back with us later in the program. Also coming up in this hour, we'll look ahead to the payrolls report with Jennifer McKeown of Capital Economics. Delayed January jobs report coming out later this morning then. Let's get a preview with Bloomberg's Michael McKee. So, Michael, the consensus seems to be around 65,000, but what would actually be with outside any margin of error? What would be a surprise?
Well, that's the interesting question, and you put it well in the opening when you said, what are the data actually going to tell us? Let's take a look at the numbers that we do expect that will matter to the markets today. That 65,000 number could be boosted a bit by seasonal factors because the seasonals expect a lot of retailers to be laying off employees, but they didn't hire as many this holiday season, so they may not lay off as many, and we might have an artificial boost there. The other thing with the January estimate is that we don't know at this point what the break-even number is. The question you asked, Vani, there is, what's an acceptable number? Some analysts say now with the labor market shrinking, it could be as low as 35,000. And so that would be a very good number. Wall Street a little more pessimistic, expecting only 35,000 jobs. So you get a bigger number, and maybe you have a positive impact on Wall Street, especially if the unemployment rate should go down. We're expecting 4.4%, but it could round down to 4.3%. And a number we don't often look at, but has become very important right now, is the labor force change. Fell by 46,000 in December. Of course, with the president deporting as many people as possible, the labor force is shrinking, and that makes it much easier to get a neutral rate of employment where unemployment doesn't go up or down.
Well, Michael, we did seem to have a tone shift in Fed speak this week, and obviously markets are starting to price in at least a third rate cut this year, but that's not really in keeping with what we're hearing from this latest round of Fed speakers, right?
Well, you have to keep in mind that we rotate 4 new Fed Bank presidents into the voting rotation this year, including Beth Hammack and Lori Logan from Cleveland and Dallas, both of them speaking yesterday, both of them suggesting that they're not in any hurry at all to cut rates again. Here's Beth Hammack of Cleveland.
Rather than trying to fine-tune the funds rate, I'd prefer to err on the side of patience as we assess the impact of recent rate reductions and monitor how the economy performs. Based on my forecast, we could be on hold for quite some time.
And it's important to keep in mind that we'll have another set of jobs numbers and another set of inflation numbers before the Fed meets again in March. And one other thing everybody wants to keep an eye on today is we're going to have the annual benchmark revisions to payrolls through March of 2025, and they could reduce payrolls during the year leading up to March by as much as 900,000. And then you get seasonal adjustments for the last 6 months that could bring us down another 200,000. It would be the level, not the change, that we are looking at for a much lower number, but it would suggest weaker hiring. Whether that matters or not to the Fed, if the labor market is shrinking, we're going to have to find out. So it's going to be an interesting day, Vonnie, to try to see how equity and fixed income markets react to this.
Yeah, there's going to be a lot of signals, a lot of clues in this data. Michael, thank you. Looking forward to hearing from you again later. Turning to technology, European wealth managers falling after a drop in US peers over concerns of AI disruption from Altruist's new tool. It's not just wealth managers either. French software company Dassault Systèmes falling the most since its IPO in 1996 after weak guidance from fears of AI vulnerability. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. Tom, Ed Yardeni used to have this idea of a rolling recession. You know, he thought we were in a rolling recession in various parts of the market over the last few years. It seems like that's what we're getting now. Every time we get a new AI tool, we get this rolling pocket of weakness in some part of the tech sphere, right?
Yeah, look, it speaks to two things. And to your point, another day and another rupture across a sector that seems and feels threatened by what is happening on the AI front. But it does speak to these two aspects. One, the markets are clearly very anxious. Investors are anxious about what this disruption is going to look like. And number two, the pace of innovation coming through from companies, not just the large language models, not just the labs, not just the hyperscalers, but also other companies that are wrapping AI around their products or products around AI. That innovation is coming through at a rapid pace and is causing this kind of volatility. So we have the wealth managers, to your point, in focus today. You've got St. James's Place here in the UK. The last time I checked, that was down about 11%. You had Charles Schwab, of course, falling, 7-8% by the close yesterday. So stateside, the wealth managers were impacted. The concern at the top line, at least, is that if you have AI products, it can do your tax and accounting for you, if it can do some wealth management products for you and make decisions on your behalf, then maybe these companies are less valuable and their proposition is less valuable than they had been before. But a lot of investors we speak to say, look, this is also speaking to a kind of sell now, ask questions later theme and feel through these markets. And so for some, there'll be a buying opportunity for here. But you know, the investors we speak to say you have to be pretty brave at these rates, given the ruptures that we're seeing across software. And again, it's not just wealth management. To your point, we go back to what happened in the insurance sector, what happened in the legal sector, private credit. We should expect that this volatility and these ruptures continue, again, as more products are put on the market and challenge some of the assumptions we make about pricing and competitive moats.
Yeah, Tom, do we know anything about more AI tools in the pipeline that could pose a threat? Can we get ahead of this, perhaps, for some sectors?
Well, you just know that, OpenAI and Anthropic, these are pre-IPO companies. They're under pressure at different levels and to different extents to monetize their massive spend and investment commitments that they're both making. And so you can expect that both those companies and others, the Googles and the Geminis of the world, are going to be coming through with additional products that, again, will challenge various different sectors or at least cause some volatility, leave some questioning the valuations on certain sectors and certain companies. So I don't have a time frame, I don't have a list of products that are coming through on the pipeline, but I think it's a fairly safe to assume that given the pressure these labs are under, that they are going to be coming through, pushing further into verticals, much beyond the base foundation models, pushing further into verticals that will challenge different sectors and different companies. I think you can assume that. Dassault Systèmes is really interesting today. I mean, just like nosebleed levels for that French company. It makes industrial software for the auto space, for the pharma space, dropping the most, Vonnie, since its IPO. And part of that is a kind of triple whammy. They missed on earnings, they missed on the forecast for this year, and of course, they're caught up in the broader software sell-off.
Tom, it is something to see each day coming in and watching these markets. That is Bloomberg's Tom McKenzie. Thank you. And do tune in to Bloomberg Tech Europe with Tom as he takes a deep dive into quantum computing. That's this Friday. Now to other top stories trending on the terminal this morning. At least 10 people have been killed and 25 injured in a mass shooting in northern British Columbia. It happened at Tumbler Ridge Secondary School yesterday afternoon. Police believe the suspected shooter died from a self-inflicted injury. The incident appears to rank as one of the deadliest mass shootings in Canadian history. The world's biggest nickel mine in Indonesia has been told to slash output. This as authorities step up efforts to boost global prices of the battery metal. PT Weda Bay nickel's ore production quota has been reduced to 12 million tonnes this year. That's down from 42 million last year. And the White House revised its fact sheet on the US-India trade agreement to adjust language around agricultural goods, further sparking confusion. The revised statement removed reference to pulses, including lentils and chickpeas, and changed phrasing around India's offer to buy more American goods. Coming up, Prime Minister Benjamin Netanyahu prepares to meet President Trump. More on what the two leaders plan to discuss next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Israeli Prime Minister Benjamin Netanyahu is set to meet President Donald Trump at the White House today. He's expected to push for rolling back Iran's military activities in the Middle East and its ballistic missile program. Joining us now is Bloomberg's Onur Ant. Onur, obviously Netanyahu has a purpose in visiting Trump. He's going to try and influence him for when President Trump deals with the Iranians. What would Netanyahu consider a win?
Well, for the Israeli Prime Minister, the key priority is to push President Trump to keep his negotiations with Iranians broad, in the sense that they should not be just focusing on the nuclear enrichment issue, but as you said earlier, they want the US to push Iran to limit its ballistic missile capabilities and sever its ties with militant groups in the region, namely Hamas in Gaza, Hezbollah in Lebanon, and the Houthis in Yemen. So this is going to be the key priority for Netanyahu going into these meetings. But the problem here is that although there have been some American officials that spoke along the same lines or similar lines over the past few weeks, we have seen that US President Donald Trump himself said a narrow deal that looks at the nuclear enrichment issue alone with Iran could be acceptable for the US. So there's clearly a discord between Washington and its biggest ally in the Middle East on this matter. And this is why Netanyahu is going to, or has gone to Washington, D.C. to basically try and change the US attitude toward these negotiations with Iran.
And Iran, for its part, has also said discussing proxies and discussing ballistics off the table, right, Onur? Moving to a different theatre, Ukraine now, the Financial Times reporting that it's begun planning a presidential election alongside a vote on any kind of peace deal with Russia, and that President Trump has actually said this has to happen by May 15th or you lose your security guarantees. How does Volodymyr Zelensky manage this? Votes by May 15th?
Well, it's, yeah, as you said, this report alone is quite important because it marks possibly the single most important development since we have seen this build-up of U.S. pressure to push Ukraine to a peace deal or, as you said, risk losing proposed U.S. security guarantees. Now, there are two actually complicating factors for Kiev. First of all, how do you execute this election and the referendum on such an ambitious timeline during a time of warfare? But also, there is an added layer of complication for Zelensky, and that is the fact that the gaps between Russia and Ukraine for a peace between the two to be achieved remain very wide. There are certain issues that they have yet to agree on, and probably the single most important bit is that any such deal at this moment could involve or could force Ukraine to cede control of some territories, including the Donbass region. And that's something that Ukrainian President Zelensky has been adamantly opposed to since the beginning. So that those two factors really make the implementation of such an ambitious election plan or election timeline, it just makes it extremely difficult.
Yeah, there seems to be a huge rush on. Onur, we have to leave it there. Thank you so much. That is Bloomberg's Onur Ant, managing editor for Middle East and North Africa. Let's take a look at some commodities now, because we have New York crude still above $64 a barrel, Brent crude above $69 a barrel. So that calm that returned to the market after it looked like there might be some kind of an accord with the Iranians, I mean, it's there, but we're not seeing any huge sell-off. Gold back above $5,000. Look at that, up another 1% now. Coming up, Heineken plans to cut 7% of staff as beer slump weighs on the Dutch brewer. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Heineken gaining in Dutch trading after ending 2025 on an uptick boosted by a cost-saving program that saw the brewer cutting up to 6,000 jobs. Bloomberg spoke with CEO Dolf van den Brink earlier.
It's really a tale of two stories. We see our growth algorithm in emerging markets very much alive, where demographics, urbanization, GDP per capita is driving an increase in consumption. We have key markets like Vietnam, India, Ethiopia, South Africa, Latin America markets, which tap into that trend. The other tale, of course, is the more developed markets like Europe and North America, which seem more challenged and where bigger and bolder innovation is needed. Case in point being our Heineken 0.0, which locked in the 7th year of mid to high single-digit growth in the important US market.
Okay, good morning to you, Dolf. So if that's the story, emerging markets versus developed markets, is the alcohol moderation story in developed markets, is that going to result in you being more EM and alcohol-free focused as a business?
I think in a way these growth drivers have been there for a while. If you look to the focus of our M&A for the last 5-6 years, we did a big deal in India, which arguably is the biggest remaining opportunity for very fast growth. A big deal in Southern Africa with Distel and Namibian breweries. Very recently, very happy to close at the end of January our acquisition of Fifco in Central America. So we are deploying our additional capital in growth markets with good fundamentals. And in the more developed markets, it is really about premiumization, which remains very relevant, and we are a global leader. Low and no is still, on a global scale, a couple percent. In important European markets, already 5%. And key specific markets like Germany, the Netherlands, Spain, it's already 10%. So we believe this low and no and 0.0 beer has still really years and years of growth ahead of it.
Dolf van den Brink there, the CEO of Heineken. Time now for your front page news. First up, Financial Times is reporting activist hedge fund Elliott Management has built a significant stake in the London Stock Exchange Group as it contends with fears of AI disruption and a lackluster listings market. The FT reports Elliott has encouraged the LSEG to consider launching a multi-billion-pound share buyback once the £1 billion launch tranche is completed, and to focus on closing the gap on margins compared with rivals. Next up, the Wall Street Journal is reporting activist investor Ancora has built a roughly $200 million stake in Warner Brothers Discovery and is planning to oppose Warner's deal with Netflix. The Journal reports Ancora believes Warner failed to adequately engage with Paramount's Skydance and has privately informed Warner CEO David Zaslav it's considering launching its own proxy fight if Warner's board doesn't negotiate the best deal for shareholders. And finally, on the front page of the Washington Post, a federal grand jury in D.C. refusing the Justice Department's attempt to indict 6 Democratic lawmakers over their comments to military service members. The Post says it's the latest rebuke of the Trump administration's push to prosecute the president's foes. Federal prosecutors last year launched an investigation into the lawmakers, all of whom served in the military or with intelligence agencies, after they released a short video advising current military members to reject, quote, illegal orders. All right, let's take a look at these markets. We have a few hours to go before the delayed January jobs data and, more importantly perhaps, before the 2025 benchmark revisions. Futures are going nowhere after the S&P 500 was down about 0.33%. Still up on the year, though, in February. We have a little weakness to the US dollar, as you can imagine. A day like today, you might see that, but also we are seeing continued strength for the Japanese yen. And then we have the 10-year yield just down a basis point, tiny little bit of a bid into treasuries there at 413.08. Let's take a look at Bitcoin. We haven't looked at Bitcoin so far today. We are hearing reports of whales perhaps getting back into the market, but we're still trading around $66,000 a coin. So we are still in that sort of sub $70,000 range. All right, coming up, we're going to push ahead to that jobs report. We'll speak with Jennifer McKeown of Capital Economics. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Well, it is countdown to the jobs report. Futures are deciding what direction to take, the dollar a little weaker ahead of the delayed January payrolls data and those revisions. No quiet corners. AI disruption fears hit European wealth managers following a sell-off in their US peers. And Israeli Prime Minister Benjamin Netanyahu set to meet President Trump at the White House to discuss Iran. So let's take a look at those futures then. After a little bit of a sell-off yesterday, trying to decide which direction to go, but Russell 2000 futures are sure they're going higher. After all, small caps have been some of the leaders. Anything but tech really over the past few sessions in particular. Every time a new AI tool comes out, it sends fear and panic into certain corners of the market. Let's take a look at the bond market because that curve, of course, came down towards the end of last week and it's staying down there. It's at 344.57 on the 2-year, all the way out to 477.19 on the 30-year, with swaps pricing in the potential now for a third rate cut this year ever so slightly. Let's get a look at some individual stocks to watch now. Over to London and Abir Abu Omar. Abir.
Hi, Bonnie. Let's start with Robinhood, the online brokerage firm. This ties into the macro story of what crypto is doing, right? I mean, Bitcoin was down quite a bit over the past month. It was down over the fourth quarter, and this is what Robinhood is saying is primarily the reason behind their disappointing earnings yesterday. Actually, crypto revenues in Robinhood were nearly 40% down over the fourth quarter. So it really makes sense that the company has turned a little bit towards prediction markets and putting their investment there. That was the best performing business. Second stock we're taking a look at this morning is Mattel, which is doing pretty terribly this morning in the pre-market. Vonnie, down nearly 31% on disappointing sales over the Christmas period. Now, when a toy maker, when the Barbie maker is posting disappointing earnings on Christmas, that tells you that it's a really terrible story for investors, and that's why the stock is down this morning. And finally, we're taking a look at Lyft. The stock is down. It was down about 17%. It's down a little bit more now in the pre-market trade. It is also an earnings story quite similar to the earnings that we saw from Uber. It's much larger competitor, but also investors are quite, jittery when it comes to the disrupting tech that is coming to these ride-sharing apps, primarily robo-taxis. So this is creating some weakness in Lyft this morning. Vonnie.
Those are gargantuan moves. Gosh, this market doesn't play around. Abu, thank you. That is Abir Abu Omar. We're 3 hours away from January payrolls, plus, of course, 2025 revisions. Let's bring in Stuart Paul of Bloomberg Economics for a preview. So, Stuart, the consensus is 65,000. The whisper number is more like 35,000. What's Bloomberg Economics?
I think both the whisper number and the consensus forecasts are way too high. We think that it's going to be even below 10,000 jobs added in the month of January. I think folks are really failing to incorporate the updated birth-death model at the Bureau of Labor Statistics. That estimates basically the number of companies that are born and the number of companies that go bankrupt, and as a consequence, the number of jobs that are created on net each month from that business dynamism. When that process is revised, it's going to strip out about 30,000 jobs per month that had been propping up the typical monthly flow of job creation. And I think that that's why we saw comments from White House NEC Director Kevin Hassett from Peter Navarro trying to talk markets down from expectations of such a high jobs print. I think 70,000 or even 40,000 on the whisper is way too high. It's going to be closer to zero.
Worst case scenario, say it is zero. Say it's minus. Hell, why not, right? Is that enough to cause the Fed to start worrying again? I mean, the difference of 30, 40,000 in a typical month and a typical year wouldn't really be that much outside the margin of error.
I think for a single month's print, it wouldn't drive the Fed to change its mind about rate cuts in the near term. I think if we were to see an uptick in the unemployment rate back to 4.5 or even higher, that would get the Fed to move. I think that for the rest of the market, though, for folks who think that the labor market is outright tight, this is going to be a wake-up call. When we see revisions, when we see a re-estimation of the birth-death model, and we see a slower flow throughout 26 of net jobs created each month, I think it's going to be a real wake-up call. But for the Fed, it's all about the unemployment rate.
So the fact that swaps are pricing in a third quarter point cut this year and 2 by September, is that more a function of President Trump saying, you know, interest rates should be the lowest in the world, they should be at least 2 points lower than they are, or is it actual data and the idea that we might have serious revisions to last?
I think part of it is about the revisions. I think some people, as we saw in the bond market, some folks are starting to understand that the labor market is cooler than previously believed. I do think that politics are playing a big role. Part of the pricing in of an additional cut in 2 by September is the expectation that political pressure on the Fed and the confirmation of soon-to-be Chairman Warsh will result in additional cuts this year. We think that it's possible that we get even a fourth cut this year if we see the turning over of inflation that we think is going on right now. Once we get past January, I expect we'll see a real coming off of goods inflation.
What makes you so confident, given that we are still seeing companies report tariff pass-through inflation?
So we're still seeing it at least through January, but we're seeing a much narrower breadth of discussions about price pressures, of any sort of input cost pressures. It was interesting when we saw PMIs, Vani, that there was a little bit of a stronger than usual January bump up in prices, and it seems as though companies are taking the opportunity with cover from tariffs to raise prices to catch up just a little bit. But beyond that, when we screen through 17,000 earnings transcripts, it looks as though discussions of price pressures are fading pretty materially. So as much as we hear about it sort of in high-profile stories, the breadth of discussion about it is actually narrowing pretty swiftly.
Stuart, thank you so much. Looking forward to seeing what that number is and what all the numbers are later on. That is Stuart Paul of Bloomberg Economics. Jennifer McKeown of Capital Economics looking at 30,000 jobs created in January at the lower end of estimates, although not quite at the Bloomberg Economics end. As for the revisions, she's seeing the average monthly change in payrolls of 49,000 in 2025 to be revised down to show a change of between minus 25,000 and zero. Jennifer is Chief Global Economist at Capital Economics, and she joins us now. So Jennifer, do you agree with what Stuart just said? Are those all the reasons why you see weaker jobs?
Yeah, I agree with a lot of what Stuart's just said for sure. And these revisions and the change to the birth-death model are really going to make this report much harder to read than usual. I think Stuart's right that there will be some shock out there about a relatively soft print. Some people may not have foreseen either the change to the birth-death model, which will affect the January number, or the incorporation of actual data from the quarterly census of employment and wages, which will affect how business births and deaths are incorporated throughout 2025. So as you were just saying there, we were expecting some really significant downward revisions as a result of that, which might come as a bit of a shock as well.
Well, Paul Donovan of UBS made a good point this morning talking about those revisions. He said that they'll bring the data closer to reality, but that won't change the narrative that the employment reality last year was consistent with a low fear of unemployment and consumers willing to cut savings to pay for tariffs. So even if we do get, much more negative numbers for last year, what does it matter in some ways?
I think that's right to an extent, Bonnie, because we've already seen from the household survey that employment looked to be significantly softer than the non-farm payrolls data were implying. So this doesn't come completely out of the blue. There were already other closely watched indicators out there that were pointing to a softer labour market. So I don't think it changes things dramatically. I think one thing that will be really interesting is whether in the profile, when we take those revisions together with the January outturn, is the profile going to show something of a pickup coming into January, albeit from a softer start point than we previously assumed? If that pickup is there, and we are seeing it in the household survey, then that should give the Fed some comfort that while the labour market has been softer, it is starting to recover. And that's something that Lisa Cook, one of the more hawkish members, has been suggesting, that yes, the labour market has been a bit soft, but that it is starting to recover. And that means that you don't need many more rate cuts, whereas, of course, Christopher Waller, Michelle Bowman are pointing much more to that weakness as justifying the rate cuts. So I think the profile is going to be really interesting.
Yeah, I mean, we have, 5 meetings between now and September, and the market is saying by then we'll already have seen 2 cuts. Does it matter when they come, if that's the case?
I don't know if it matters very much when they come. It certainly matters if they come, and I doubt that both of them will. Our assumption is that we only get 1 rate cut from the Fed this year, and only then once we have a new chair. So I think that would come as a bit of a surprise. It's likely to push up yields a bit as markets come to that realisation. It might help to support the dollar too.
You mentioned Lisa Cook and Tom Barkin, but there is a big split on the board, and, you know, obviously inflation concerns haven't gone away. Let's take a listen to what Beth Hammack had to say.
Rather than trying to fine-tune the funds rate, I'd prefer to err on the side of patience as we assess the impact of recent rate reductions and monitor how the economy performs. Based on my forecast, we could be on hold for quite some time.
On hold for quite some time. That is very much at odds with what a lot of market participants and very many members of the board think, Jennifer. So how do we find a middle ground? How does the FOMC find a middle ground?
Well, it's just going to be watching the data very closely, isn't it? And particularly those data on the labour market to try and judge whether things are weakening or whether the strength of broader activity, and particularly this kind of AI investment optimism, is driving demand up and perhaps putting some heat into the US economy. Our view is that it will probably be more the former. And with interest rates already quite close to the neutral or equilibrium, it's not surprising that a greater divide is emerging on the FOMC. But I think there's not really going to be any justification from the US economy to bring rates significantly down below that kind of neutral level.
Well, Jennifer, we'll have more clarity a little bit later on, at least about the jobs data for the last few months anyway. That is Jennifer McKeown of Capital Economics, and thanks for joining. Now to other top stories trending on the terminal this morning. At least 10 people are dead and 25 injured in a mass shooting in northern British Columbia. The shooting happened at Tumbler Ridge Secondary School Tuesday afternoon. Police believe the suspected shooter died from a self-inflicted injury. The incident appears to rank as one of the deadliest mass shootings in Canadian history. The world's biggest nickel mine in Indonesia has been told to slash output. This as authorities step up efforts to boost global prices of the battery metal. PT Weda Bay nickel's ore producing quota has been reduced to 12 million tonnes this year from 42 million last year. 2 co-founders of Elon Musk's artificial intelligence startup XAI are leaving the company after less than 3 years. Jimmy Ma and Tony Wu's departure mean half of XAI's founding members have now left. Their exits follow XAI's recent merger with SpaceX. Coming up, Prime Minister Benjamin Netanyahu and President Trump prepare to meet in Washington. More on what's on the top of that agenda next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Talks in the Middle East ongoing. Qatar is saying that the nation's leader and President Trump held a call to de-escalate tensions in the region. This as Israeli Prime Minister Benjamin Netanyahu is set to meet with President Trump today at the White House. Before departing Israel, he said indirect U.S. diplomacy with Iran tops his agenda, saying, quote, excuse me, I will present to the President our views regarding the principles of the negotiation. Joining us now is Bloomberg's Tyler Kendall. Tyler, what will Netanyahu try to get across to President Trump that President Trump doesn't know already?
Yeah, hey, Vonnie, good morning. Well, there's actually reports that the Israeli Prime Minister Benjamin Netanyahu will present President Trump with new military intelligence regarding Iran's military capabilities as he tries to push President Trump to extract more concessions on the table when it comes to U.S.-Iran negotiations. This will mark Netanyahu's seventh visit to the White House under the second Trump administration, as he's going to try to pull on that personal relationship as these talks move forward. Now, Netanyahu's visit to the White House comes after a flurry of diplomatic activity last week. We saw Netanyahu meet in Jerusalem with Special Envoy Steve Witkoff, as well as the president's son-in-law, Jared Kushner, who are leading the bilateral negotiations between the U.S. and Iran, which kicked off on Friday, and both sides characterized as being relatively positive. Still, we know that they went into the meeting with perhaps contrasting parameters. Iran had gotten its request to keep these negotiations bilateral and only focused on its nuclear program. But we know the U.S. as well as Israel is really looking for these talks to expand. They also want to see them address Iran's ballistic missile program as well as its support for proxy militia groups in the region. And we know the U.S. wants to bring in some other regional partners so that there can be perhaps more discussion when it comes to regional stability in the region. This is something that White House officials have repeatedly said, that they want to make sure that there is more of a coalition involved in these discussions for there to be perhaps more of a lasting scenario here. So with all of this said, we heard in an interview yesterday, President Trump said that he maintains diplomacy is on the table. He maintains that he thinks Iran wants to make a deal, but he ultimately alluded to this idea that there is still the potential for military strikes. In fact, our own analyst, Vonnie, at Bloomberg Economics, say that that likelihood is pretty high, particularly as we heard President Trump tell Axios yesterday that he could send a second armada to the Middle East amid what has been a major bolstering of U.S. military assets in the region.
And then domestically, President Trump's facing a little bit of pressure too. The House talking about voting against some tariffs. Tyler, take us through this. What can the House do?
So this is actually a blow to House Speaker Mike Johnson, Vonnie, who has been trying to shield his members from taking politically fraught votes. And it is setting up a potential rebuke for President Trump on one of his signature policies as we head into midterm campaigns and the election later this year. I won't get too into the weeds of what happened, but late last night, we essentially saw 3 Republicans cross party lines and block an attempt from Mike Johnson to block a vote on the president's tariffs. This is now setting up procedurally in the House that we could see votes as early as today rebuking the president's policy, potentially repealing the first vote that's going to be up, his tariffs lobbied against Canada on an emergency basis. And I will quickly add, if we look at the 3 Republicans that cross party lines, they really represent different factions of the Republican Party. You have somebody like Thomas Massie, who has been very outspoken against the president, also somebody who's in a competitive district in California. So it really spans this. Vonnie, we'll have to see where it ultimately goes.
Yeah, we'll watch throughout the day. No doubt there'll be some developments. Tyler, thank you. That is Bloomberg's Tyler Kendall. Turning to tech now, and European stocks are lower with wealth management stocks struggling after an AI tool aimed at creating tax strategies sparked a sell-off in its US peers. AI fears also hitting French software company Dassault Systèmes, which fell the most since its IPO in 1996 after issuing weak guidance. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, can we expect this across industries as more AI tools roll out? I mean, AI has been in all of these industries for the longest time. Is it just that these shiny new tools are creating panic?
Yeah, I think they are to a degree, and I think it should be a very loud wake-up call to management teams across pretty much every sector, to be honest, that you need to double down on what your AI strategy is and get going with implementation if AI needs to be an important part of your business going forward. And I think this tax planning tool from Altruist Technologies is a good example of how established industries face the threat of being quite significantly disrupted, but there's still a big opportunity for the established companies like people like Charles Schwab to defend their leading positions by having a clear strategy on AI and making that very transparent and clearly communicated to the investor community so that they kind of feel reassured and confident in the outlook.
Yeah, because you wouldn't have thought that one company, Altruist, would have such a wide moat, right? That not only would there be no competitors to it, but all the established players are sort of taking a nosedive. It's all very, very strange. What other tools are in the pipeline or might be in the pipeline that are going to scare away investors?
Yeah, it's a good question. I mean, I think obviously some of the areas that kind of seem ripe for disruption are travel, for example, and obviously people already use AI assistants quite heavily for travel planning, but most people are kind of doing that just through ChatGPT or Gemini. And if you think of the likes of all the kind of big travel planning websites and online platforms, you could easily see some kind of new tools come there that kind of integrate all that stuff and offer a compelling alternative to consumers. And again, there's still an opportunity for those existing platforms to evolve their offering and offer the same kind of services, but it's a question of speed and minimizing the risk that a disruptive new entrant can grab share and really become the new leader of the future.
Yeah, and how long is it going to take for some of these CEOs to come out and defend their own products, right?
Yeah.
Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Coming up, jobs report front and center today. Your day ahead is next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. We do have consumer earnings. They're continuing with Kraft Heinz and also Hilton before the bell. Then, of course, the main event, delayed January payrolls at 8:30 a.m. Eastern, and, of course, revisions to all of last year's benchmark revisions there. And President Trump and Prime Minister Benjamin Netanyahu meeting in Washington today a little later on. Let's take a look at some micro movers before the open. Robinhood down almost 8% now. That's a year-end crypto rout story, basically denting its revenue. Lyft down a whopping 18%. It disappointed with its forecast and it had a surprise revenue miss, in fact. And Mattel down by almost a third, wiping out nearly a third of its market cap. Its holiday results missed estimates, and that was a massive surprise. Let's take a look at the macro environment before Jobs Wednesday. We have nothing really happening with futures, a little bit of weakness for the US dollar, and we have just a little strength in treasuries, but not a huge amount of movement. If anything, yields are just coming off a very little bit. Once again, we have a stronger yen today, as well as that yen just keeps strengthening after Takaichi's really hold on power, much stronger hold on power. So that has something to do with that story as well today. Anyway, that's it for Bloomberg Brief. We're going to be continuing to watch out for that economic data at 8:30 Eastern and banging the drum right up to that data. Surveillance will continue that conversation next. This is Bloomberg.